Hey everybody, good to be here today. Time to explore Thinkorswim together. Today we're going to be going through some of the scanning features here on Thinkorswim. So I'm looking forward to doing that with you. I'm also looking forward to doing it alongside my friend and colleague Barb Armstrong, who teaches some wonderful webcasts. And so make sure you check out some of those. But you can follow Barb or myself on X at at Brent Moore CS, at Barb Armstrong CS, and we appreciate you. Now, before I get into the actual platform here and go through that, let me just remind you, you can always ask questions in that chat between Barb and myself. We'll do our best to answer your questions, of course. And remember, the information here today is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application, that's what we're using, by the way. We're not using the Thinkorswim web. We're not using that, although there's a lot of carryover between the two platforms, to be honest. But anyway, this software application is for educational purposes only. And all investing involves risk, including risk of loss. Short options can be assigned at any time up to expiration, regardless of in-the-money amount. Stop losses do not guarantee an execution at or near the activation price. Past performance of any security or strategy does not guarantee future results or success. There we go. Let's head on over to the Thinkorswim platform. We have up a little bit today, up about 0.25% today. You can see the general trend on the S&P 500 has been up. Looks like maybe we found some support around that level. If we do break below there, where's the next support level? I'd probably call it kind of in this range here, roughly. We'll call it about there, where we bounced off there, before we gapped up there. But, we'll see how that goes. Now, there's a lot of different features on Thinkorswim, and that's what I'm here to show you today. This is technically what we call a platform demonstration session, but I want to make it as practical as possible for you, for your user experience, because it's more than just clicking buttons. It's about trying to integrate the platform with your trading style. So I wanted to show you some different approaches to the Scan tab. So I'm going to click on Scan, and if you're new, it looks probably something like this when you bring it up, that Scan tab. And I just want you to realize you may have some filters that show up here initially. We're going to call these filters. These are what we're doing as we're trying to find companies. It's like you're trying to find, let's say you're shopping for a new car or shopping for a new house online. You don't want to look at every house available. You don't want to look at every car available. What you want to do is you want to whittle that number down to a manageable number. And that's the goal of the scan, is trying to find those stocks that meet what you want in whatever category and get it down to a more manageable number. So for example, this kind of basic scan I have here is showing 11,000 stocks. That, by the way, is too many stocks to go through. You don't want to have to spend the next 2 years going through them, so we want to narrow it down further. How much further? I don't know. Maybe you want somewhere in the 5 to, 15 range. It can go a little lower than that or a little more than that, but you don't want too many stocks. You also probably want more than one stock there too. You want to be able to compare because sometimes despite your best efforts, let me just tell you, there's been times when I've put together what I think was going to be the greatest scan in the world, and I hated the results. Whatever your intentions are with the scan, sometimes it just doesn't give you the results that you want. That's why you want more than one result there to check those out. So anyway, so these are filters here. So right now this scan, you'd say, has 3 filters. Well, you can delete any of these. You just click on the little X mark over there to get rid of them. And then of course you can add more filters here. And that's what we're going to do. We're going to add some filters. So let me go and just show you, like if I want to delete, I'll delete that. I'm going to delete all those. And if I want to add a filter, I can add filters. There's different categories of filters. Some filters are more, say, if you're searching for options, which we're not going to do today, you can click on option. If you're doing a fundamental filter, which we will do today, you'd click on fundamental. There's also other filters such as study filters. In fact, I did a scan, I don't know, it was a couple months ago using a study filter, and it was a scan for a flag pattern. In fact, what I'm going to do is I'm going to share in the chat for those of you watching live, where you can watch that video if you're interested in scanning for that flag pattern. In other words, a technical analysis platform pattern you can scan for. That's not going to be my focus today, but if you want to view that, how to view these technical analysis patterns, check out that webcast that I either pasted in the chat, or if you're not watching live, what you would do is you're simply going to go to the YouTube page for this class, click on the playlist, or go to the Trader Talks YouTube page, and pull up the playlist. There's a lot of playlists, but you can pull one for this class, and it was maybe 2 months ago ish, okay, that I did that, and it's labeled as scanning for flag patterns or something to that effect. Okay. But today what I'm going to do is I'm going to focus more on fundamental based scans. So by fundamental, what I mean is companies that meet certain financial measures. For the stock trader, that is kind of a standard approach to finding stocks, is looking for stocks that meet certain financial conditions. What's the PE ratio? What's the growth rate? Stuff like that. Does it pay a dividend? Things like that. And you can scan, but you can customize it to what you want. So what I thought I would do today is show you at least a couple different scans here. I would like to do a growth scan and show you practically how to do that, and also show you kind of the other end of the spectrum there. Do a value scan. Now, sometimes people say, I'm not just a growth investor, or I'm not just a value investor. I want kind of mix of both of those. And sometimes we'll do a scan that's called like a GARP scan, or growth at a reasonable price scan, growth at a reasonable price. And basically you're just taking elements from the growth arena and the value arena and mixing them together into this scan there. So you can do what you want. Now, you can also do income, dividend type stock scans as well and whatnot, but that's not going to be, I thought I'd focus on those areas to get us started off with. All right. Now, as you have questions, let me know, but let's go and actually run a scan. So what I'm going to do is, before you start adding filters, realize you can start your scans up here at the top of the page, and you can narrow it down by, you can look within your own personal watch list if you want. So for example, let's say I had a personal watch list for, I don't know, it doesn't matter. A watch list I've created of, that's actually built from another scan of S&P 500 energy stocks. Well, I can click on that, and all of a sudden, whatever I search for is going to limit those results to the S&P 500 energy stocks. Okay, so that scan right there, that watch list right here, was actually a previous scan I did. I created a scan by starting with the S&P 500, narrowing it down to energy stocks, and then I saved the scan. And once that scan is saved, it is then available to you, for you to use in other scans if you want. So for example, if I want to start off with just S&P 500, I can go to public, S&P 500. And then I went to intersect with by industry. I went to all energy and selected all energy. Then I just ran that scan, and it's going to give me the same results as what I did before. But once you save that scan, which you can do by clicking on these the middle of these menus there, these little hamburger menus or pancake menus, you can save that scan query, and then you can use that for other things. Let me give you another example. And I'm not talking about options today, but I did a scan that I saved, and it is, I've labeled it liquid options. Where is it? There it is. Liquid options. Okay. So this is looking for stocks in, I think, the S&P 100 with a minimum volume and some other criteria there. Okay. But now in the future, when I want to search, I can just start with that save scan there. Now, I just wanted to make you very aware there's a lot of functionality up here before you even get, we haven't even started adding filters here. Before you get there, there's a lot of stuff you can do there by saving your scans. All right, but for today, we're going to be real basic. We're just going to go to public S&P 500, and we're going to start with that. And I'm not going to narrow it down any further up top here. We'll add filters to narrow it down, but I'm not going to intersect with a particular industry group or another watch list or anything like that. But just realize you can do that or exclude certain stocks from there. Okay, so let's start with the growth search. How about, okay, S&P 500 stocks, and some of these parameters that we're going to add are going to be very growthy. In other words, focused on the growth of the stock, and some are going to be more general. When I click on add filter, I'm going to go to stock here, and I'm going to stick with this ask price. So this is just the price of the stock, and I'm going to say I just want $10 or more. Okay. Now on this particular scan, since I'm already looking at the S&P 500, well, almost every stock on the S&P 500 is going to be $10 or more. Let me just click on, yeah, it's basically, I don't think that whittled it down at all. But I wanted to just demonstrate to you that that is a very common parameter you may use. Maybe you wanted $20 or more or something like that. That's fine. You can tweak this to however you want. That's a basic stock filter. The basic stock filters is, when you look at these, it's kind of just standard basic stuff, low price, high price, and there's some other things. You can do a dividend yield there. But for the most part, this is going to be more of a financial focused scan. So I'm going to actually get rid of that, and I'm going to start adding some fundamental filters. So I'm going to click on fundamental, and I add a fundamental filter. Now, when I add that, you'll see it pops up book value. That's just because it's alphabetical. That's the first one on the list. That's the only reason. Now, we're going to tweak that here in just a sec. But let me just make a point here when I talk about adding filters. When I'm adding these, you can add these. You can do these scans in Paper Money or the live platform. Once you start getting in the realm of study filters, though, it's going to say, "Niet." You can't do those in your Paper Money platform. You have to do those in your live platform. It'll give you a little error message there if you click on that. Okay, but in this case, we're doing a fundamental filter, and what I'm going to do is, remember, this scan is focused on earnings. So what I'm going to do is I'm going to go to earnings, EPS, or earnings per share. I'm going to scroll down to the E's, earnings per share, TTM. Earnings per share is TTM. TTM is trailing 12 months, the last 12 months, okay? So earnings per share, trailing 12 months. Now, when you add some of these filters, there's a secondary field that may appear. On some it appears, and at some it doesn't. These earnings ones typically have that, or sales that's similar or whatever. But you can click on it and just view and see what you got here. What I want is, I don't really want the absolute number of the earnings. What I care more about is the growth of the earnings. So what I'm going to do is I'm going to click here. I'm going to leave it as annual, actually, year-to-year growth. I want YOY percentage, year-over-year percentage growth is basically what I want here on that. So it should stick right there now. And now this is going to be a growth search. So I'm going to put a relatively high number in there, not ridiculously high or anything, but I'm going to put a relatively high number, a minimum of 20% there. 20% growth year over year. That's a fairly good number. A lot of value stocks will not meet that parameter, but there's enough stocks in here. In fact, let me click on scan and see what we got. 154. So we've cut those 500 stocks down to 154 stocks there by just saying, I want the most growth, earnings growth focused. And when we talk about growth, by the way, that is typically what traders focus on, not exclusively, but typically when we talk about growth stocks, I would say most traders are referring more to earnings growth than anything else there. So we're going to put in that hurdle of at least 20% there. Now, I don't want just year over year earnings growth. I want that actually earnings growth to be maybe a little bit more tried and true, so to speak. In other words, going back in history a little bit more. So I'm going to add another filter, another fundamental filter here. And when we go to earnings per share, let me go back to that earnings per share here. And I'm going to click on this one. Now notice these are kind of tricky. They're kind of similar. The first one did this TTM, and this one I did I'm going to click on earnings per share. Notice it gives me different choices here on this though. And I'm going to go 3 years, and I'm going to say, I don't need 20% every year, but I'm going to say at least 15% per year, okay? 15% average growth on that company. Now, if I click on this again, notice we've just cut that list in half again. We're whittling it down. I would say 74 stocks is still probably more than what I want to deal with. And I also want some other parameters here on my growth search, my growth scan. Sometimes I say scan, sometimes I say search. Forgive me, they're basically the same thing because some places will call them scans, some will call them searches, some call them screeners. On the Schwab.com platform website, we'll call it a screener, but it's essentially doing the same thing. We're trying to narrow down those stocks. Now, earnings is what we call bottom line growth. You ever heard that on the bottom line? What's their bottom line? That's earnings. But you may also hear the term top line. Top line is the money they bring up front in. That's their revenue or their sales. So what we're going to do is we're going to do the same thing, except we're going to go with revenue here. So I'm going to add a filter. I'm going to make it a fundamental filter. I'm going to go down to revenue, and I'm going to click on revenue. And I'll do the same thing, 3-year average, and I'm going to do the same thing, 15% here, okay? 15%, and I'm going to, let's just click and see. And we narrowed it down by a third. We cut that down again. So it's harder. You kind of narrow this down and we're getting fewer stocks. We could still do some more stuff here, but this is kind of the heart of a growth, this particular growth search at least here, okay? So, but we're going to do some more stuff here. I'm going to do, I want year over year growth here on this as well. So let's keep on adding a few more parameters. I don't want to get too restrictive on this, but I'm going to go to sales per share. Now, this is essentially revenue. You could call it revenue per share, sales per share, but this allows me to go to year over year percentage. That same one I did before, year over year. So I don't know how to say it there's no necessarily logical way to remember it. Just remember, you have more than one earnings per share, okay? And there's more than one revenue or sales. And some of them have this available and some of them have the longer look back on that. And so there you go. When it says per share, it gives you that option for the percentage growth there. Okay, now Bob in the chat said, can I perform a scan based on expected future earnings growth? The answer is not currently, Bob. I wish I could. On the Thinkorswim platform, the answer is no. On the Schwab.com website, the answer is yes, Bob. Okay, so you can play around with that. I do teach a Get to Know Schwab.com webcast on Thursdays. And if you look back through the playlist of that, there's one you'll pick out, I don't remember how long ago it was, where I did growth scans on that, and I'll show you. In the parameter on there, I actually use future growth projections there. It is currently not available on Thinkorswim. Now, there's the thing on Thinkorswim, little tangent here. They're always adding new features and stuff, so it wouldn't surprise me if we have that in the future. But right now, alas, the answer is no. Okay? Now, let me go and let me get out of my little drawing tool, and let me go up here, and I just want to show you where you can reset. This was, sorry, it's blocked right there. Reset. This is for Bill in the screen. Bill's like, how do I reset this thing? Just click on reset right up there, okay? Right there. Okay, let's move forward. We did sales per share, and I wanted that to be 20%, okay? 20%. And let's do one more maybe. I'm going to do one that's a cash flow growth. And here's let me give you just a little history as to why I do cash flow growth. An older place I used to work for, we had a screener that was called Great Earnings, Sales, and Cash Flow. And I loved that kind of instilled those three kind of fundamental aspects of growth companies: earnings, sales, and cash flow growth. So I try and incorporate those in a lot of my growth type searches. Here's my earnings, here's my sales, and then we're going to add in a cash flow, and then we'll probably call it good to there. Let me just make sure I've got 8 stocks. Hopefully this doesn't narrow it down too much. Okay, we'll see. So what I'm going to do is I'm going to go to add filter. I'm going to go to fundamental. I'm going to go to cash flow per share. Actually, I'm going to go to free cash flow per share. Free cash flow per share, that takes out like capital expenditures out of that equation there. And I'm going to go to year over year. We got that. And I'm going to do the same thing I did on these others. I said above 20% earnings per share growth year over year, 20% sales per share growth year over year, and I'm going to do 20% free cash flow growth per share year over year. Okay, we'll call that good there on this one here. Now, I've got 5 of these results. Hopefully, I'm encouraging you to kind of build along with me there if you want. And then what you can do is you can always save the search, save the scan, and once you save the scan, what it enables you to do is, in the future, let's say you're looking at stocks, you can go up to your watch list, and once you've saved a scan, you can go over to the scan you've saved and pull that up. This is a different scan right here, but it pulls up some stocks there. All right, so that's kind of a slick way to do that in the future. Save it so you don't have to rebuild, you don't want to recreate the wheel, so to speak, each time. Okay. So there we go. So then this is the start of it. This is not the end of it. This is the start of it. The start of it is you find your stocks, and then you go through and analyze the stocks. Now, this class today is not going to be an intensive stock analysis class. We've talked about that in the past some, but I want to just kind of go through some basics here. And one place when you're doing a fundamental scan is go to the Fundamentals tab. The Fundamentals tab is under Analyze. I know a lot of you think of the Analyze tab as almost synonymous with the risk profile, which we use often for options, but there's a great page here called the Fundamentals page. ANET we'll just use that. That was our first result on the list here. And let's just kind of briefly, quickly go through this page and just point out some high points to you there. There are third-party analyst estimates you can check out there if you like. They're not a guarantee. Sometimes analysts get it absolutely 100% wrong. Some people find these interesting, though. If you want to see a particular report, you can click on download that report and read that report. Get a little extra color commentary, so to speak, on the stock that you're considering, a way to get kind of a second opinion on those. So that's all I'm going to talk about those right now. It gives you a description of the company. Maybe you don't know what Arista Networks does. You can read all about it right there. There's your description for it. Let me keep on scrolling down there. How do you save you know what? Good question. Tony said, how do you save the scan again? I don't know if I ever even showed you. So let me show you. You go up here you click on the middle of these little pancake menus. You go to the middle one, click on it, and it says Save Scan Query. And then it pops up a window, and then you can name it whatever you want right there. Okay? And then you click Save. And that's how you save that scan. So good question. Okay. I should have addressed that earlier, but let me go back here to our Analyze tab. So we talked about the analyst reports. Here's the description. Now, this is a great page right here. Okay, it's a great page because it gives you the last basically 5 years of information going from left to right. Okay, so the more recent data is on the right. For most of these areas, what we want is we want them to be going up probably. You know, that's generally like with earnings. You like to see, you know, most traders like to see earnings going up, a company making more money. Most traders like to see cash flow going up, etc. If they pay a dividend, we like to see that going up. This one doesn't pay a dividend. That's why it has the NA right there. So no worries. I don't care whether it pays a dividend or not. A lot of growth stocks don't pay dividends, but there you go. But we like to see this going up, and just realize there's no perfect stocks out there, so it's not going to go up in every you know, it's not going to be perfect in every. Book value, generally we like it to be increasing. Cash flow per share, generally we like it to be you know, click on repeats. Here's a little hiccup on this one, but it seemed to resume just fine on that. There you go. Sales, same story. Return on equity, generally we'd like that to be going up. And for the most part, it's been going up. Okay. And margins, gross margins, operating margins, same thing. Net profit margin, same thing. There are some exceptions to this thing that I've just been saying we want it to be going up. And that is, sometimes we see things like debt ratios, long-term debt to capital. We don't generally want that to be going up. This is actually very low here. It's been going down though. Okay, so that's actually a nice trend on this one, in that it's going down. And something like a payout ratio, if it paid a dividend, we'd actually like that one to be going down too, because that's just saying how much of the earnings are you paying out in forms of dividend. We don't want that to be too high typically. But there are limits to them. In other words, we don't need like quick ratio, current ratio. Current ratio, a lot of, like, let me just give you kind of an example cutoff. Some traders like to see a current ratio of, say, 2, okay? 2 or higher. Higher is generally better. It's already at 4. It's already very high. There's probably, I wouldn't, if this dropped down to the 3 range, I think most traders wouldn't sweat it too much. Or if this trends down a little bit, probably it's still fairly high, you know, so there's, you know, it's only goes so far on that, okay? Now, we also see valuation down here. Now, what's our valuation? The current PE ratio on this is around 46, okay? So that's pretty high, right, by most kind of average standards there. You need to consider it in contrast to you know, some of its peers. You can always check out, compare it to peers if you like. But that is, by most measures, probably not going to be top on a value stock list with a PE of 46. That's okay. This is a growth scan. That's what we're gunning for here, is growth. If we want to do a value scan, we're probably going to put in a PE ratio there. So, all right. So that's an example of a growth scan there. And I think I'm going to leave it at that. And then, of course, by the way, so let's say you do the scan. Let's say you look at the fundamentals and you say, you know, those look good. If that's your feeling, you may look at the chart. And you may say, well, is the chart looking pretty good? Well, the general trend has been pretty good on that right now. And maybe you use technical analysis, maybe you don't, but that's the general trend. Shorter term, pulling back. Is it going to find support? I don't know or not, or whether it's going to keep going down. But the point is, you can integrate technical analysis along with the fundamental analysis, right? Okay, that's growth. Let's switch gears here. Let's say you want to do the same thing and you want to do a value scan, okay? So I'm going to reset that guy. Let me just shrink this down. And I'm going to start from kind of the same place. I'm going to start in S&P 500. You don't have to. S&P 500. I'm just kind of, with using S&P 500, you get larger cap stocks. It's not better or worse. There are some advantages to it. Number one, it gives you results that a lot of you may have heard of or are likely to encounter more often in the future. That doesn't mean the stock's going to perform better, but I think you guys like that better. And number two, it tends to give you more liquid companies, and especially if you get in the realm of options, which I'm not going to get into today, but if you get in the realm of options, that's important, the liquidity. Well, it is in stocks too, but it's even more of a challenge that you're faced with options there. But so I'm going to start with S&P 500 here. And let's do that. What's kind of the consummate value ratio for a value stock is a PE ratio. You can find that right. Add stock filter. Just go to stock and you can go to PE or price to earnings, PE. Sometimes you may see it listed in places as PE, sometimes as price to earnings. Doesn't matter. Tomato, tomato. Okay. And I'm going to say, I'm going to put a minimum there of 5 and a maximum of 20. Now, something I didn't explicitly call out before, on the other search I did, on the other scan I didn't always put a maximum value in. You can leave it open-ended on the maximum range. You can leave it open-ended on the minimum range too, by the way. In this case, I want a zone. I want the sweet spot there on that. So the why not above 20 may make sense to a lot of you. Price to earnings is how much that stock is, you're paying for a share of that stock for a share's worth of earnings of that stock. That's what a PE ratio is. And so if you don't want to pay very much for that, that's where the value aspect of the value search comes in. That is so that's why people will limit out at the 20. Okay. Why do I limit it on the downside though, on the minimum side? Isn't it lower better? Well, the answer is this. Sometimes if the price of something becomes too low, it becomes questionable as to why it's so low. That makes sense. Probably in other areas of life that makes sense to you. If I am selling a car, and we'll say I don't know cars, I'm not a big car person, but let's say I'm selling a 2023 Ford F-150, and I'm asking $20,000 for it, you may go, that's curiously low for that. It may not be, that may be a signal there's something wrong with it. So that's why I put that 5 in there, okay? There's just an analogy there just to hopefully make sense. Now, when I scan that, look, we've knocked down that 500 list, 500 stocks down to 157, okay? So let's move forward though, because it's more than just a PE ratio. Here's what I'm going to do though. I'm actually going to add in, and this one may surprise you a little bit. I'm not going to go, let me get out of that. I'm going to go to the stock filter again, and I'm going to add an earnings per share. Now, Brent, this was a value search. Why am I putting in earnings? Here's the thing. What I don't want is, I don't want a company that doesn't have any earnings at all. Any earnings at all. I want a company that's not losing money. So I can just put in 0.1 or something like that on there. Okay, let me just, and that's going to narrow down. I don't know if that narrowed it down much at all. But I just want a company that's making some money there. Okay? So let's move on here. Let's go to another value parameter here. And I'm going to go to fundamental. And I'm going to go to price. You get this, here's like your value parameters, price to earnings ratio. We already put PE up there, okay? Price to cash flow ratio, price to book value. I'm going to stick with cash flow here. Now, this is one of those curious things. I think for a lot of people, the price to, you may have a sense for a price to earnings ratio and what's high, what's low. Do you have that same sense on a price to cash value ratio? But price to cash flow ratio value, though? Likely not. But you can use the Thinkorswim platform to assist you in that. What I want you to do is look at this little box right here. This is this like cute little histogram box, shows you the data points. Okay, so you see some like little itty bitty ones there, and then you get some more big spiky ones there. And you can kind of see the range for it. It goes from there to there. And we'll say not much down there, not much up there, but it's kind of in that range. But if I don't know the range I want to look for, what I can do is I could just drag this out. I know I want it to be lower generally. It is a price to cash flow value ratio after all. But I can just click. You see how I'm clicking and I drag. And I can just drag this down about halfway down the list or something. And I can see, oh, look, if I do that, we'll just kind of leave it there. Or you can, if you want for futures, you can just kind of put it as a particular number so you can remember that and not have to drag it. Oops, I meant to put that in at 15. There we go. Okay, so you see, okay, there's my problem. I want that. I'm going to leave that on no lower end on that. We'll just leave it. I mean, it doesn't matter. I can move, right? I can move this up to 5 or something like that, right? And this to 15. Come on. Click enter. Sorry, I'm having sticking a little bit there. I don't want that. I want that to be empty. There we go. Okay, let me add another filter in here. Maybe that. There we go. It disappeared. I don't know why that was sticky there. So you can use this as a kind of a means of seeing what level you want that to be out at, and drag this in, drag that in, and adjust that for the data points. And what I know now is on my price to cash flow ratio, I'm excluding some of the like low outliers there, but I'm also excluding about half the stocks. We're getting the most value oriented half in terms of the price to cash flow ratio of those. Okay, let's move forward here. Now, not everything we're going to do is necessarily going to be an explicit value ratio, PE, price to cash flow, or things like that, okay? But what I'm going to do is I may add some others, and this is true not just for a value search. We could have easily done this. Oh, I added it twice. I could have easily done this for the growth search too. We could do a current ratio. We could do a debt to equity ratio. And that, I'm not seeing that. Why am I not seeing debt to equity? Oh, it's because it's under long-term. That's right. Long-term debt to capital, okay, is what we're going to use there. All right. But remember, you just got to adjust this. So this can tweak to other things. I'm going to leave this as current annual on that. And for my current ratio, I'm going to say I want at least 2. Remember that when we were looking at Arista Networks, it was like a 4. And I said that was kind of on the high end of things. You see, 2 gets you there. What's a current ratio, you ask? A current ratio is how much current cash and cash equivalents and stuff that's going to be turned to cash in the next year as compared to liabilities and bills due that are going to be due in the next year. That ratio there. And so I'm going to put a minimum of 2 on that. All right. And so there we go. And in terms of debt to capital, I'm going to put in a maximum of 40. Okay. 40% there on that one. Now, when I do this, let me just click on scan and see how many results we got. We have 14 results here. Just a heads up. The difference between the Schwab.com platform and this is on Schwab.com website, that would be considered 0.40. So you got to be careful on different websites. Sometimes the format is that's 40%. This is basically 40% on the Schwab.com. So I'm going to leave that there. So just a heads up if the results aren't looking right on that. Okay, and then let's do, well, I mean, we can just leave it there, to be honest. We can scan there and come up with results if I want. If I want to add in one and go beyond just anything positive on earnings, I can add in an earnings filter. But notice it's going to be different than the earnings filter that we did on the growth. When I did that growth and I did earnings, we'll go that, okay, year over year, when I was doing growth, I was saying 20% growth rate. That probably would not be appropriate for a value screen. In this case, I'm going to put something significantly lower. We'll put in 10%. We'll see. Maybe that may be too high. Okay. And we got 6. Okay. We'll call it good there. Okay. So this is a value scan here. You could leave out that last one there if you want. But if you are going to add growth parameters to a value scan, or value parameters to a growth scan, don't be overly ambitious in that regard in terms of ratcheting up the numbers too significantly, because at that point, it kind of ceases to become a value scan or a growth scan. All right? So there we go. So here we go. And you can see some Bunge Global. I'm not familiar with them. Hartford Financial. Okay. You can click on, and then you can do the same thing. Go to the Analyze tab, and we're going to do Hartford. Again, you can check out the analyst ratings. By the way, just a heads up on these third party. Market Edge is more of a technical assessment rather than a fundamental assessment. You can read about it. We like to see these going up here for earnings and growth and dividends. But remember, this isn't a growth stock, so they don't need to be spectacular here. ROE, we like to be getting better. Debt, again, doesn't matter. We don't want it to be going out of hand. It's kind of roughly staying about the same there. But here's the last thing I need to say on this. With value stocks, this is where you're going to see them typically. You can see the value. Here's your PE ratio. Well, it's around 12 right now. Okay? You can see where it is compared to its 5-year average. Here's your price to cash flow ratio. Here's your price to book ratio. Remember when we were looking at Arista, our PE ratio was like 40 or something. That's well and good. It's very likely, probably more likely, that company is going to grow faster than this company, given what the growth rates have been. You never know. I don't know what's going to happen with it. But in this case, we're searching for value, so we're going to put more emphasis on those value parameters. Okay. Now, I'm out of time, everybody, but I just want you to realize this is a powerful tool, this screener, that you can use and customize it to what you want. If you want growth stocks, make growth stocks. If you want income stocks, put in income parameters like dividend yields and payout ratios and dividend growth rates. If you want value stocks, you're going to put in stuff like PE ratios and price to cash flow ratios there. Play around with it. That's your homework. Find some companies that are of interest to you, but realize that's the first step. It's not the final step. You still need to analyze the companies. And hey, thanks for joining me today. Thank you, Barb, for helping me out. Make sure you subscribe to the Trader Talks channel. And let's see, coming up next, we have generating income in your portfolio. And in the meantime, we will see you all same time next week. Bye-bye, everybody.